and I'm really honored to be here today. I love talking in my hometown. I spend a lot of time traveling and speaking these days, and I'm particularly delighted to be involved with this prestigious symposium. Now, of course, I have a slightly different relationship with risk, and I'd like to share some of that with you today. I want to talk a little bit about the risks that I see globally and for the future of the United States. And then, if you don't mind, because it's what I do best, I'd like to talk to you a little bit about the risk that is ahead for your personal financial future and talk to you about planning for the rest of your life in terms of money. You all deal, I gather, with insurable risk. Matt mentioned, I sit on the board of CME Group, Chicago Mercantile Exchange, the Board of Trade, NYMEX, which is the world's largest listed marketplace for hedging risk. That's what it is, and it's truly global now. We've opened CME Europe, so we are more global than you would even imagine. I sit on the audit committee. Audit committee supervises ERM, the biggest buzzword of the decade, enterprise risk management. And I also sit on something called the Market Regulation Oversight Committee. And so I deal with the risks inherent within our market and the regulatory construct in which we operate. And frankly, I always thought that we were just there to hedge risk. But when you become the company that provides that service, you expose yourself to a whole new bunch of risks. And I'm fascinated by the world that you cover. Now, what I think is, and correct me right now if I'm wrong, but I think you are all risk experts, and that primarily you deal with insurable risks to a great extent, whether it's property or business interruption or risks in terms of litigation, directors and officers insurance, maybe key man insurance, the kinds of risks that are traditional risks. But I also know that as risk managers and risk advisors, you are dealing more and more with a much broader risk horizon. And that traditional definition of broker for insurance is just probably a small part, or a risk manager in a corporation. That the insurable risk, well, literally, it ought to be the easy part right now. There's a lot of uninsurable risk that you can mitigate against and perhaps hedge against. I think particularly of accounting risk, the risk in the numbers, the risk that's supposed to be mitigated by internal audit. Systems risk, both internal and external facing systems risk. Hard to buy insurance except for maybe business interruption insurance, but it's truly the greatest risk, and it's a global cybersecurity risk. Reputational risk. How on earth do you insure against reputational risk except by being alert and aware to all the things that could be compromised in that regard, no matter what your business is? Legal and regulatory risk. Of course, I live in a world of financial markets where regulatory risk is like an oxymoron. It is what it is. And it's always present. And I think if you're in the world of banking or insurance, you know that the government, the risk of our own government designed to regulate and protect us might be one of the greatest unmitigatable risks that we face. And then there are always company-specific risks. If you're doing business internationally, there's currency risk. If you're doing shipping or logistics, there's a whole new set of risks. And finally, there's disaster risk. That always used to be written off in one line in an insurance policy. Well, except in cases of disaster, force majeure, a war, for example. But now we have disasters, it seems maybe to us, on an increasing basis, whether it's a tsunami or whether it's an earthquake, and we have wars sort of breaking out all over the world, and a few more financial wars that I'll talk about. Everybody's trying to map risk. And how about this for a heat map, okay? It's a real one. But there are a lot of risks that I don't think you can map, and that's what I want to talk about today. I want to focus on the risk to America's future. There are some big ones out there. This is America, the greatest, most powerful country ever, and the one that has created greater wealth for more people than any other society ever. But there are risks to our future. There's an inherent global risk which will, of course, impact on us, which we've managed somehow because we're such a great, strong country to mitigate by just being ourselves, but we are linked closely in the world. And finally, all of you risk managers, I hope you'll give me some time to talk about the risks inherent in planning for your own personal future. So let's get started. I want to start with a slide that I use in almost every presentation, no matter what the level of the group. I've been using it for the last couple of years because there was a time when people were very concerned about the very survival of this country. And I always say, don't bet against America. America will survive and prosper, and so will you, if you plan, save, and invest. And let me say this, nobody ever got rich betting against America over the long run. This is a country we live in. This is the country we work in. This is the country we make plans in, raise our children, and for some of us, many of us, grandchildren. So we are under a great obligation, not only for ourselves, but for the next generations, to make sure that America always remains the greatest country. We have the odds on our side. But we have another big problem, and I will just narrow it down to this one slide. We have huge debt. This is a website. I'll give you some websites throughout today, but they're all in the book, so you don't have to take notes. I'm glad you have the books. Thank you, Hayes, for that. Truthinaccounting.org keeps track of our national debt. You'll notice that there are two, actually, counters on this website. I just freeze-framed it. The official national debt, now over $16.5 trillion, that keeps ticking up instantaneously. And below it, our unofficial national debt, which is well over $72 trillion, and that's the amount of money, even more shocking, I have a friend who calls those MIGO numbers. My eyes glaze over. That's the money we owe, we've promised in Medicare and Social Security benefits, government retirement benefits, military retirement benefits. America is laboring under a huge burden of debt. And that is the biggest threat to our financial future. I don't show economist slides, I show big picture slides. So let me just give you this one. This chart goes back to 1791, the founding of our country. And those big dips were when the government was spending a lot more money than it was taking in. The Civil War, World War I, World War II. Never have we had such an incredible accumulation of deficit spending, even as a percent of a much larger economy, than we have right now. Every year for the last 3 years, we've added $1 trillion to our national debt, spending $1 trillion more than we take in. That's unsustainable, especially since you know that we've made so many promises for the future. Who buys that debt? Thank you, China. Let's see if this will work. If you take a look, the red bar, the big red bar, is foreign ownership of the United States debt. And the green line is domestic ownership. The only way we've gotten away with borrowing so much money is because we send a lot of dollars over to China as we buy their stuff, and they have very little choice about where to invest it, so they've been lending us money, and albeit at very low interest rates. I don't know if you've bought Treasury bills as a safe place to put your money, or Treasury notes or bonds, but they're paying less than 0.5%. Even a 2-year Treasury note yields less than 2%. Interesting that they keep accepting our debt, being willing to hold dollars for 10 years at less than 2%. We always look at all these other foreign countries that are overspending as profligate, and isn't that ridiculous? But we're creeping up there. Greece, Iceland, Italy. And we'll talk about Cyprus in just a moment. The United States is not such a pure country. Japan actually has a larger percent of debt to GDP, but it's mostly owed to themselves. The only way out of that, dealing with that debt, is economic growth. Ask me, what are the other choices? Could we tax it away? This was the argument in the entire election that never got resolved and has just barely being resolved in Washington today as they once again postpone. Could we tax enough money away? Cyprus was called upon to do that. The more you tax, the less work you get, productive work, the less of a tax base, and the deeper you have to go into those who are still working. If you took away all the money and confiscated it, I've always said that, and now suddenly we're having an example of it in the world, of the wealthy, so-called wealthy, it wouldn't make a dent in our national debt. Can we cut spending? My goodness gracious, we've just finished with this giant debate over the sequester. The sequester was a 2% cut in the increased amount of federal spending for this year. You would think the world is falling apart. Yet, as I wrote in my column, every single American family paid 2% more in taxes on Social Security this year as the gift went away from the past few years. So now they're collecting the full FICA. That's a 2% increase in taxes you paid because you're working, 2% less money that you have to spend. And people didn't run around shouting, oh my goodness, the sky is falling. But the sequester, as it rolls through the economy, has been the subject of much gnashing of teeth. The president has closed the White House, the People's House, to official tours for school children over the Easter holidays. We really need to get serious. What's the third alternative, the way out of all of this debt? Well, we could print the money. More on that in just a moment. The optimum way to deal with debt is to create an environment, both tax, regulatory, structural, that encourages economic growth so you get more people working and paying taxes in, fewer people needing benefits from the government. That, my friends, is the only way out. But where are we today? Let's just take a look at our current economy. We have slow economic growth. I'll show you the pictures in a moment. We have relatively high unemployment. We have weak consumer confidence and a lot of political uncertainty. Can you believe that Congress just went away now, passed a continuing resolution? We've never had a budget in 4 years. They've passed another continuing resolution to continue spending, but not a real budget, and they've gone off on a 2-week holiday. I don't know anybody who could go to work and say, I haven't done my job. It's sort of, well, but you know what? I'm going to postpone it till October, and I'm taking 2 weeks off, boss. None of us would get to keep a job. Here's what I mean by I give you charts to give you perspective, okay? This goes back just a decade. We have fourth quarter growth was 0.1%. It'll be a bit stronger in the first quarter. Remember, in the fourth quarter, there was a lot of uncertainty over the year-end crisis. We have unemployment currently, yes, down from its peaks, but still 7.7%. Again, even for the last decade, way too high. Consumer confidence, I want to give you this chart, goes back to 1967. Consumer confidence, the big dip over the far right, if you can see this, is in 2009, when everybody really thought it was the end. I was sitting there on TV going, no, 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 keep investing in your 401k. I know the Dow's around 6,700, but your $500 a month will buy you more shares. But everybody was really scared. Sure, we've bounced back, but nowhere near the peak levels that occurred in 1999, 2000, or even the best levels previously. Consumer confidence isn't back. And yet, with all of this, where are we today? Stocks just about at an all-time high. All-time high. So you might be asking, what's going on? The stock market's supposed to be a barometer of the economy. Terry, you've just talked about big long-term structural problems with debt, a crazy group of politicians in Washington heading off to vacation, and a slow economy with high unemployment and relatively low confidence. What's going on? That's what's going on. Money. Money moves markets. And the Fed has been creating money at an unprecedented rate. They buy $85 billion worth of government securities every month, and just yesterday reiterated that that's the plan. And they pay for it with newly created credit. I used to talk about nobody ever asked the Fed chairman to put his driver's license number on the back of the check they used to pay for those bonds they buy. We're so much more sophisticated today. We know the Fed just creates money when it buys securities and holds a portfolio of government securities and of mortgages and of other securities it bought back in the depths of the crisis. And they continue to create money.
When it comes to Q&A, that's where Terry's expertise really shines.
One or two more?
The question I had was, it seems as if, one of the major indicators is the percent of our GDP. And we are getting higher and higher in that. Why is the rest of the world not really targeting that for us? Because, unless that was your 72 billion versus your 16 billion, we seem to be getting away with it.
We are, because the whole world is based on the dollar standard. every transaction for oil, every transaction for most major global commodities is priced in dollars. And the entire world rushes to the safety of the dollars when the euro is called into question, or for briefly when the yen is called into question, and certainly when Cyprus calls in to question the euro land commitment. So we are the least worst place, and that's why we're getting away with it. Because where would anyone go? And despite the fact that people say, well, gold, of course. You know, there's a finite amount of gold, and it's pretty heavy and so forth. It's hard to imagine a sophisticated, interconnected world that doesn't have a medium of exchange. And as long as there's trust in the medium of exchange, you can have functioning markets. The minute people don't have trust in the medium of exchange, whether it's little old ladies worried about what their savings are going to be able to buy, right? Or whether it's international corporations wondering what the buying power of their money held overseas for this contract will be, they have to hedge the risk. That's the futures markets do that. And in a world there's always risk, you always need to hedge. But in a world where the risks overwhelm the ability to hedge, then you search for the last best hope. Up to now, it's been the dollar. That's what you're keeping your eyes open for.